Good job, dude. Taking care of your sister. I gotta go do work. Love you all. Bye. What's up, guys? Todd here. Do a free video update. Sorry, it's been a little sporadic here. Good CPI report. There's a few things I want to show you, talk to you about why I look like such a college kid. I work from home. I have for years. What? Oh, you're listening to 90s music. It's good, man. All right, so what are we going to talk about? Three important things. One, the CPI report got down to 3% of the headline level. That was good. I want to talk about the macro reaction short term after the report, and then the macro reaction longer term with currencies, interest rates, and commodities, which again, those rates and FX, the dollar, are very much driving sector rotation. Sector rotation is kind of the key to, figuring out what stocks you want to be in. So, and then I'll give you a trade that we're in now, we're moving a stop on, and then a trade we're looking to put on for the stock swing desk. So let's dive in. Hey, just made it. All right. Ooh. Let's go. All right, here. So let's take a look at the CPI to start. I had to put a hat on. Not only do I look like a broke college kid, but I need a haircut too. Okay, so I tweeted this out, kind of showing this CPI. This is the annual year-over-year change. And the CPI obviously exploded during the pandemic, went up very quickly. And as I said here, the rate of change is falling faster than the rate at which it went up. So this is charts that'll update in a few weeks. We just printed 3% year over year. And then the target, Fed's target, is down here at 2%. So when this chart updates, it'll be down here. And I'm wondering, can the Fed just turn it off like that and stop us at 2%? I'm wondering if we might overshoot on the downside. And it makes me kind of think that Powell needs to start to take a little bit more of an less aggressive sort of bash us over the head tone at the press conferences. That's going to be higher for longer, more rate cuts, because again, if we get down through 2%, can they just turn it off? And that's leading, I think the market knows that, and it's leading to, along with the big AI push and the next generation tech boom that we're in, the market knows the Fed's going to have to get a little bit softer going forward. Okay, so here was the response after the CPI. And here's the other thing that's really interesting. That's why we titled the video, All That Glitters is Gold. So this is sort of the 5-minute macro futures overlay that I watched around key data. So you can see that there's a lot of movement right at 8:30. And then I'll explain what the lines are. So purple up there, let's go with yellow. Yellow's gold. So QGC is actually the net winner today on a percent change basis post CPI. Right behind that in white is the S&P futures. Purple is the NASDAQ. Orange TY, that is the 10-year Treasury futures. Purple weird color down there is the 2-year futures. And then down here is the dollar against the yen. So what happened? You had the dollar selling off, and that is going to be reflective of higher Treasury prices, both 2-year and 10-year. Remember, higher 10-year futures or note prices and bill prices and bond prices are going to equal lower interest rates, lower yields in the U.S., and yields have been strong because inflation's been strong, and the Fed has been talking very tough to keep those rates higher. So what happened? Again, Treasury shot up, your 10-year shot right up, along with the NASDAQ in purple, the S&P in white, and gold. What's interesting here is even if you're bullish stocks, you want gold and bonds to rally. It's all a function of a weaker dollar, which is down here in green, right? The weaker dollar is going to be reflective of lower interest rates, which is a less aggressive Fed, which is going to encourage those driven purely by fundamentals and valuations to rotate into the higher valued tech and away from those dividend paying value trades. So that's the weird thing that I think very few people understand is, I'm not bullish on gold because the same situation in which growth stocks rally is the one that gold rallies. It comes down to a question of opportunity cost. I want gold to go up. I want bonds to go up. I think bonds and stocks are going to go into a direct correlation. The bond market recovers, driving interest rates lower, the dollar lower, and continued rotation into growth. And that's the real point of this video. Okay, so you got to get the macro down. Okay. So here's a good look of the U.S. 10-year yields in yellow and the dollar index. Okay, very good correlation between the two going back to, man, we could even go back to probably the pandemic. So dollar in white, yields in yellow, just kind of pulling this. Yep, certainly that's the case. But what's happened? The dollar has broken away on the downside, and the yield market has stayed stubbornly strong. Well, we kept bumping up against this 383940 level in the yields, and there's a lot of macro intermarket situations trying to pull against that yield, back it away. The dollar is clearly one of them. The dollar just broke to the lowest level that we've seen since spring of 22. Okay, so from an Elliott wave point of view, here's the dollar. I think it's pretty simple. It's a 5-wave move down here into the beginning of this year. We've done a triangle consolidation in the first half of 23. And as I said here, textbook target and a C wave post-triangle thrust is 618 the distance of A. Okay, so those of you who aren't Elliott dorks like I am, basically what you do is you take the percent change distance traveled in A, which is going to be, I can do that real quick for you. That's going to be 12.16%, multiply that by 0.618, project it down from the end to B, and that is going to be right here at about 95. Okay, so lower dollar, again, going back to the last chart, lower dollar is going to continue to drag that yield down. And as we arrive at the main point, probably the real reason you're here in the video is you want to see the rotation between growth value, what sectors and what stocks you want to trade. But to get high probability on your trade, to have a lot of sort of factors working for you, so you're swimming downstream, letting the current carry you to profitability, is you want to understand what's going on with the major asset classes like currencies and fixed income, which a lot of it's Fed policy, and commodities, which we looked at with gold. We want gold to go up. So this is how you increase your probabilities as a trader and an investor. Okay, so that's the downside in the dollar, which again, good things happen with lower dollar. Okay, so people are still, I can't believe it, but they're still saying this is a narrow breath rally. My kids watch this all the time, Sandlot. All I can say is, like, you're killing me, Smalls. Okay, so this is the monthly. Okay, so let's look at the monthly rotation. Oh, that's my market, that's my team. Okay, so this is the value growth rotation on the monthly. Okay, so the group over here on the left, Vanguard mega cap growth, Vanguard mid cap growth, Vanguard small cap growth. And as you're moving up and to the right, that is rotation, which means you're picking up momentum and relative strength to your benchmark, which is using the S&P 500. Over here is your small cap value, mid cap value, large cap value. So what's interesting, I've said this in videos before, we have not even seen a proper rotation into the leading quadrant. Mega growth is all heading that way, as value has left leading, has down into weakening, is almost moving into lagging. So we have a long ways to go in this growth trade. Okay, now that's fine, but what about the point where I was saying that, okay, this is the participation, the breadth is increasing? Well, let's get off that monthly and let's zoom in here a little bit and get down to the weekly rotation. Okay, this is going to be a lot more of a hyperactive chart as you're seeing real sector rotation at work here. But what's interesting with this rally is look at the one guy that's out and to the right that has already shown significant outperformance and relative strength. It's this green guy right here, Vanguard Mega Cap Growth. Everything else has been down in the toilet, bottom left and lagging, but moving up. And as you rotate in this direction, you are now going from underperformance down here. You're stopping your underperformance, picking up some momentum. And if you can make the hook up and to the right, that's when you start gaining outperformance. What is moving up and to the right? Everything. Everything except mega cap growth. Small cap growth, mid cap growth, mega cap value, mid cap value, small cap value. Now, there's a difference, okay? The further to the right you are, the closer you are to leadership in a sector rotation point of view, right? So we have mid cap growth and small cap growth are further to the right. So they're going to be stronger than all the values, big cap value, small and mid cap value, right? But the point is they're all heading up. So the rally is becoming more widespread. You have small mid-cap growth. You have 75 billion and less, 50 billion, $10 billion growth companies rotating in, joining large cap, which is great because they're further to the right. But you're also getting value rotating and participating here as well. So the rally is becoming more broad-based, right? And it's kind of funny when I hear people say it's still being led by a few. You're not looking at what's going on. If you don't have the right tools, you can't. Okay, so how are we trading this? One stock that I think we're going to put on tomorrow. I'll give it to you. It's a big one. It's Google. It's obviously large cap, mega cap growth. Communications have started to rotate back in within the growth trade that's rotating in. This is a beautiful Elliott wave pattern. We have a nice 5-wave move up here. 1, 2. We're looking inside of green 3. You must break down into 5 waves. We have orange 1, orange 2, orange 3. Beautiful fib support zone here, 118 to 115. Elliott wave is great for trading because it's got built-in risk management tools. So if you go below wave count and validation, that means your thesis is wrong and you have to have a stop, right? And then we have upside take profits as well. So watch out for Google. And then another trade that I mentioned we have on, it's a fun one. We have it on in our stock swing desk and we just moved the stop. I'll show it to you. It's DraftKings. Right here, DKNG. So we put the trade on May 19th, bought it at, where was entry? 23.50. This is the actual setup chart. This is what we make available to our members. So I just gave you a quick snapshot. So that was the setup way back here in May, right around 23.51. Okay, and here is the, here's the actual position. There's DraftKings. So yeah, so again, we trade, a $250,000 portfolio. DraftKings right now, we have a 2.35% initial position. Now it's up to a 3% position. And we just adjusted stops to, where did we put stops? DraftKings 25.75 right there. Okay, so here's the actual trade. I have 250 shares in this $250,000 portfolio. Again, we're just using it for actual live money. I mean, I trade live money. This is an account I trade for trading analysis with, with real money, real positions, because who else would you trust unless, you're putting money behind it. So this is the actual portfolio we're managing with our trading analysis customers. So little 250 share trade, we're at 30.50 now, long from further down, no big deal. And I'll show you the updated chart. We just updated the stop. And here is DraftKings. Now, the reason I bring it up is because the breakout's been awesome, but you also want to be careful. Okay, and I'll show you why. All right, so first thing is, here's DraftKings daily. We're long from right here. It was a nice little ABC pullback in wave 2. So we're long from 23.5. Kind of hung out. We started to sort of go into consolidation, and then we just ripped higher. Now, this is the track using Elliott wave that I think we're going to follow. And there's 2 key Fibonacci projections that we're going to use to begin and take profits. Okay, so the first one is going to be 100%, and this is the one that just highlighted right here. Okay, so you take 100% Fib projection of this swing in early 23 to the current swing. 100% is going to be right about 34.5 bucks. Go to smaller degree, little blue 1 compared to blue 2. Another 100% at about 34. So you want to be careful up into that zone, okay? And specifically, if you get a smaller degree 5-wave move, we're going to continue to trail the stop up. I might even write some calls, up around 35 area. So, if we get called away, it's a good technical upside objective. Obviously, we made a lot of money on it. It's been a great trade. And we are getting rotation with the growth trade and specifically consumer discretionary that we'll talk another time. And we'll leave it there. Okay, guys, hope that helps, and we'll see you on the next video update. Hi, it's Todd from TradingAnalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at TradingAnalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.